Enphase Energy reported quarterly financial results on October 2nd, 2024 that sent the stock price down by over 10%. In this video, I'll review those latest financial results and I'll answer if I think the stock is a buy, hold, or a sell following these earnings results, or in other words, should you buy Enphase Energy stock on the dip? So let's take a look at the financial results first, and then I'll answer if I think the stock is a buy.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So if you're not already aware, Enphase Energy is a global energy company that is the world's leading supplier of microinverter-based solar and battery systems. So solar energy for your homes, and that's been an area of interest given the energy credits and the tax incentives that people have been getting to upgrade their systems, and the tax credits that businesses have been getting to facilitate the production of these domestically. So an interesting thing has been going on with Enphase Energy in its year-over-year revenue declines. In the latest quarter, $380 million in revenue, down from $551 million in the same quarter last year. And that was true for the second quarter of 2024 as well, which was down significantly from the prior year. There was a big change in California law that made it more incentivized for people to consume the energy they produce with their solar systems rather than send it back to the grid. The prices they were getting for sending the energy back to the grid were changed and unattractive now. And so those big changes made it a little bit less attractive for people to install these systems. And that's just one of the reasons why demand for this company's products is down significantly year over year. Still, the company's asset-light business model allows it to generate profitability even in the event of these declines. Operating income, $49.788 million in the latest quarter. That's down from $117.989 million in the same quarter last year, but still profitable, still meaningfully profitable, even with these big revenue declines. And that says a lot about the business model. The company saying that the increase from the second quarter to the third quarter was due to higher shipments to distributors as inventory returned to normal levels. Still, there was a further softening in European demand, and revenue in the European segment was still down from the previous quarter, while revenue in the US segment was up from the previous quarter but down year over year. As I mentioned, the company is getting significant benefits from the Inflation Reduction Act, and that's allowing its gross profit margins to be higher than it otherwise would be because they're getting incentivized to produce these products domestically. Enphase has an excellent balance sheet. They exited the third quarter with $1.77 billion in cash and marketable securities, and they generated $170 million in cash flow from operations in the third quarter of 2024. So this is well on its way to being a sustainable business. It generates enough cash flow. It has a strong balance sheet, nearly $2 billion in cash. So its business is on sustainable footing. Whether or not the revenue decreases, you can see they're still able to generate positive profitability on the bottom line, significant cash flow from operations. And so the business can withstand fluctuations like this most recent fluctuation and still proceed forward in positive areas. Now, one of the good things they delivered in the latest quarter was now they increased the amount of people that are trained in installing the system. More than 9,000 installers worldwide are certified to install their IQ batteries, compared with 7,400 installers worldwide in the second quarter of 2024. So just quarter over quarter, they added 1,600 installers, which was a solid percentage increase just in one quarter. The more installers that are capable of installing these systems, the better it's going to be for its growth, as these people are going to help facilitate these homeowners and people to purchase these products, because it's going to be easier to implement the installation, and they're going to also help sell the systems. They're going to encourage people to get the systems because they know they will be benefiting from the growth of this industry. The number of installers is a key metric that investors of Enphase Energy, or those that are interested in Enphase Energy, should look out for. This is a key metric that is necessary for the company's growth. During the third quarter, they launched an AI-based software that is designed to optimize energy use by integrating solar and consumption forecasting with the electricity tariff. That's intended to help consumers maximize savings as the energy market becomes increasingly complex, such as with the dynamic electric energy rates of Europe and the new laws in California. And I'll tell you that, being from California and living in California my entire life, that energy rates in California are only increasing and increasing at an increasing rate. And I don't see that ending anytime soon. The energy companies here in California have a lot of upgrades to do to their system, and they look to the energy buyers to pay for these increasing rates so that they can go and upgrade those systems that are decades behind in terms of the infrastructure, the things that they need to fix. And so people that pay for the electricity, they're going to compare these and say, man, I'm paying so much every month for electricity. It's going to make it more attractive to look for solar because they're going to see that every year my electricity bill is only increasing, and it makes it even more attractive to switch over to these solar systems. So they have that tailwind working in their favor as inflation and as these companies just continue increasing rates of power. Looking ahead, they're forecasting revenue in the fourth quarter of $380 million at the midpoint. So that would be a quarter-over-quarter flat level if the company does indeed deliver this rate of revenue. And then the gross margin in the range of about 49 to 50%. And that's with the benefit from the Inflation Reduction Act. And then operating expenses to be between a range of 135 to 139 million. So if we do some math here, if we say 50% gross profit margin on 380 million in revenue, that would leave about 190 million in gross margin or gross profit. And then you subtract from that about 140 million in operating expenses, and you'll be left with an operating income of around 50 million, which is about the same as they delivered in the current quarter. So roughly no increase in revenue in the upcoming quarter and roughly no increase in operating income in the upcoming quarter is what Enphase is forecasting. And then looking ahead, the analysts on Wall Street that are following Enphase stock, they expect it will increase its earnings per share by about 14% each year over the next 5 years. That would be less than half the rate it increased at in the previous 5 years, where it was up about 29% per year over the previous 5 years. Still, a rate of increase of 14% is solid, especially given that the current year and over the next several quarters, they're going to face significant headwinds as they recover from these slowdowns. Now, following the stock price decrease, you can get Enphase Energy stock at the lowest valuation it's been going back about a year. It's now trading at a forward price to earnings of 17.45, which is the cheapest this stock has been. So now to answer the question, do I think Enphase Energy stock is a buy, hold, or a sell? Well, I have it rated as a borderline buy. In my rating system, that's between a hold and a buy. So I have several categories in my rating system, all the way from the top stock to sell to the top stock to buy. And in between, I have buy, hold, sell, borderline buy. And this stock falls in the borderline buy category according to my personal rating system. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.